You ever read a financial headline and think to yourself, is that the whole story? Well, today, we're going to pull back the curtain and decode the playbook that turns headlines into strategic moves. We're going to look at the hidden forces that can really drive the markets.
So, let's start with the big question, right? Are we just watching market events unfold, or are there powerful players out there actively shaping the narrative for their own gain? In the next few minutes, you'll learn how to look past the surface-level noise and really understand the strategies at play. Okay, let's get into it.
First up, we're going to start with a huge event in the global oil market. On the surface, it seemed pretty straightforward, but when you dig a little deeper, well, it might have carried a much bigger message.
Okay, so not long ago, Venezuelan oil assets were seized. The official line was simple. It was just debt collection, a way to settle billions owed to international oil companies from way back in 2007. But was it really that simple? A lot of analysts are saying, no way. They believe it was a major geopolitical power play, a very clear signal about who's really in control of Venezuela's money, and by extension, its foreign policy.
Now, at first, the numbers being thrown around were massive. Some reports said 50 million barrels, but it turns out the actual number was closer to 17 to 20 million. Now, don't get me wrong, that is still a lot of oil, but it's not the kind of market-shaking event it was first made out to be.
And in dollar terms, we're talking hundreds of millions. A huge sum of money for sure. But in the multi-trillion-dollar global oil market, honestly, it's just a drop in the ocean. So if the goal wasn't to actually disrupt the oil supply, what was the real point?
You know, the market's reaction, or really its lack of reaction, tells you the whole story. The price of oil, it barely budged. No panic, no supply shock, and that suggests the signal wasn't meant for the market at all. It was meant for the world's political stage.
This whole oil event is a perfect example of a much larger strategy, a kind of playbook that gets used all the time to manipulate financial markets. So let's break down exactly how it works.
At the very heart of this playbook is a concept you've probably heard of, FUD. It's an acronym, and it stands for fear, uncertainty, and doubt. The strategy itself is brilliantly simple. The big, powerful players, the so-called strong hands, they create and then amplify a really negative story. The whole point is to stir up fear among everyday investors, cause them to panic and sell off what they're holding. And this, of course, allows the very same people who started the rumor to swoop in and buy those same assets for way cheaper.
So, how does one of these FUD campaigns actually unfold? It's usually a four-step process. First, you create a negative, often exaggerated story. Second, you blast it out through the news, through social media, until it's all anyone can talk about. Third, you just sit back and watch the fear build and the panic selling kick in. And then finally, step 4, you swoop in and buy everything up at a huge discount.
And think about it. We've seen this before. Remember back in April when the recession narrative was absolutely everywhere. The fear was real. You could feel it. But then what happened? The market hit a bottom and then just ripped higher. An incredible 44% rally, hitting new all-time highs. It was a classic case of a scary story setting the stage for a massive move up.
Okay, so now that we know the playbook, let's see how this exact strategy might be getting used right now in one of the most talked about markets on the planet, Bitcoin.
The crypto world is practically a breeding ground for FUD. I mean, just take what happened in October. A rumor started spreading that MSCI, a huge index provider, might exclude some crypto firms. That rumor alone sent shockwaves through the market, pushing prices down. And then, only after the damage was done, MSCI came out and clarified, no, that's not true. So why the delay? It's a classic FUD tactic. Create the doubt, let the sell-off happen, and then the insiders can step in and buy on the cheap.
But here's the interesting part. Despite all the FUD, the technical picture for Bitcoin actually remains pretty bullish. There's this super critical trend line from the 2021 highs that used to act as a ceiling, resistance. Well, it's now flipped, and it's become a key floor or support level. As long as the price stays above that line, the long-term uptrend is looking pretty solid.
So that leads to a really interesting question. If the trend is bullish, why has Bitcoin been so, boring lately? Why is the volatility so unusually low? It seems like there's another force at play here, keeping things quiet.
And the answer seems to lie with the whales, the largest Bitcoin holders out there. They're systematically selling call options. Now, these are basically contracts that give a buyer the right to purchase Bitcoin at a set price on a future date. This strategy does two things. It generates a steady income for the whales from the fees they collect, and it also puts a kind of cap on the price, keeping that volatility way down.
And here is the absolute key detail.
The strike price they're choosing for these options is way, way up at $100,000. So they likely believe the price will eventually go up significantly, but they're betting it won't hit that $100,000 mark before their options expire, specifically around the end of January. This lets them keep all that premium income without having to sell their Bitcoin.
So let's just put this all together. Here's what we're looking at. The big resistance level, the ceiling, is that $100,000 mark where all those call options are sitting. Below that, people are watching $91,000 as a potential floor. And the critical date tying this all together is January 26th. That's when a huge batch of these options is set to expire. Until then, the whales have a really strong incentive to keep the price pinned down.
So there you have it. We've seen how a geopolitical move can be disguised as a simple debt seizure. We've broken down the FUD playbook, and we've seen how it might be at play in the Bitcoin market as we speak. The real story is rarely just in the headlines. So now that you know the playbook, the question is, what will you see that others don't?